Over the last month, we have seen the S&P struggle, bond yields going up, inflation being sticky, and news around interest rates remaining higher for longer. Even though the news appear to be all doom and gloom, there is a silver lining. Some of the most established dividend stocks on the American stock market are going on a discount, and in this video, we'll take a look at 4 of them. This will not be a deep analysis, just a brief summary of why I like the companies. I am bullish on them, but don't forget to do your own research. The first dividend stock that we're looking at is the dividend king with the highest dividend yield right now. That stock is Altria, trading under MO. Right now, the dividend yield is 9.2%, which is insane if you think about it. There are not a lot of companies that can afford to pay this type of dividend consistently and keep raising it. Altria owns the brand that makes Marlboro cigarettes, along with a number of smokeless tobacco products and so on. Altria recently completed the acquisition of Enjoy 2 and is focusing on expanding the brand. What makes Altria unique is the massive free cash flow that the business can generate. Over the last 12 months, Altria generated a revenue of $20.6 billion, with a free cash flow of $8.8 billion after Altria has paid all of its financial obligations. That's a free cash flow margin of 42.9%. Not only is it massive, it is also growing bigger. As we can see here, the 5-year average for Altria is only 33.75%, which makes the current free cash flow margin 27% higher than the historical average. Only a few stocks like Visa and MasterCard have better margins than Altria. In the business world, this is what you call a cash cow, and this is why MO has been able to pay such a big dividend for the last 53 years. The dividend growth has slowed down from 7.8% compounded over the last 10 years to an expectation of only 3% compounded over the next 3 years. Despite this, a lot of investors continue to like and invest in Altria, and right now, MO stock is trading just $1 and a bit above its 52-week low. If you seek dividend income, then now could be a good time to start looking into Altria. The second dividend stock has a motto of expect more, pay less. The company is one of the biggest retailers in the US with close to 2,000 shops. The name is Target and the stock symbol is TGT. Target has gone through a rough patch over the last 6 months because of some questionable product decisions. These led to a lot of people trying to sabotage the company, but the business learned a lesson. Despite this, sales did not drop any meaningful amount and moved in a normal seasonal pattern. The stock price, however, did fall. Target is down 31.4% over the last 6 months. This presents an amazing buying opportunity to get a solid dividend king with a steady growing dividend. The current expectation is about a 3% dividend growth over the next few years, which is a noticeable slowdown from the 17.7% and 11% that we used to see. We are compensated for the slowing growth with a much better yield though. Historically, Target traded at a dividend yield of 2.4%, but right now the yield is 3.93%, 65% higher than the historical average. Every single valuation metric for Target right now trades at historical lows for the company. Forward price to earnings ratio is 20% lower than the historical average. EV to sales is 29% lower, price to sales is 40% lower, price to book is 31% lower, price to cash flow is 28% lower. The PEG ratio is also only 1:11, which gives us a really solid deal on Target right now. The average price target consensus for Target by Wall Street stands at $147.6, which gives us close to 32% upside. Target has also been buying a lot of stock over the last 10 years, with a 28.4% reduction in outstanding shares, and they continue doing that. This can also help push the price back up. I actually made a more detailed video about Target a couple of months ago, and I am very bullish on the future of the company. The only caveat here is that the stock price may lag because of some reputation damage, but I personally don't see this lasting for a long time. Once that is behind the company, we can see a very big rise in price, but it could take a year, maybe 2. The third and fourth dividend stocks are beloved by so many dividend investors. The most famous investor in one of them is, of course, Warren Buffett, who has held it for about 40 years now. These two businesses sell the most widely recognized soft drinks in the world, and those are Coca-Cola trading under KO and Pepsi trading under PEP. Both Coca-Cola and Pepsi are down 5.3 and 8.4% respectively, compared to the S&P, which has returned 17.9% over the last year. But more importantly, they are down 9.5 and 11% over the last month. I actually made a video about those two roughly a month ago, and I didn't think they were a good buying opportunity back then. However, their price is coming towards buy territory, and I think we can get a much better risk-reward ratio right now. Both Coca-Cola and Pepsi are down about 21% from their 52-week high, trading only a few dollars above their 52-week lows. This gives us a good opportunity to buy two defensive businesses which can withstand problems in the economy while paying us a good steady dividend. Coca-Cola currently gives 3.5% dividend yield, while Pepsi pays a 3.2% dividend. And both of these dividend kings have been increasing dividends for over 50 years. Are you going to make a fortune buying these two dividend stocks? Probably not. Pepsi can offer better price returns than Coca-Cola for sure, but I don't know if either of these is going to outperform the S&P 500 going forward. Consumers are also starting to avoid a lot of soft drinks because of sugar content, although both Coca-Cola and Pepsi have been selling sugar-free options for a while. This is something that we as investors need to consider and research. The two companies are not going away anytime soon though. And if you're looking for steady, growing dividend income, then Pepsi and Coca-Cola can be great picks. There are actually a few other dividend kings that I wanted to talk about. Colgate-Palmolive is one of them, and I have a couple more, but I think I'll cover them in a different video. What do you think about Altria, Target, Coca-Cola and Pepsi? Are you bullish? Do you want to get those dividend kings, or do you have other stocks in mind? Let me know in the comments below, and please leave a like if you enjoyed this video. Thanks for watching, and I'll talk to you again soon.